Ever blown up your account because of one bad trade? You're not alone. Risk management is what separates traders who survive from those who don't. In this video, we're diving into the 7 essential risk management tips every Binance trader must know so you can protect your crypto and trade smarter. Before we talk tips, let's talk why risk management is non-negotiable. Binance offers powerful tools, but without a strategy, you're gambling, not trading. A single 20x leveraged trade can wipe your account if you're wrong. Even pro traders lose, but they limit their losses. Your goal isn't to avoid risk, it's to manage it. Because in trading, survival equals success. First, decide, how much are you willing to lose per trade? A common rule is 1 to 2% of your total capital. If your account is $1,000, risking $10 to $20 max per trade is smart. Also, think about your risk to reward ratio. If you're risking $20, aim to make $40 or more. This keeps your strategy profitable, even if you lose half your trades. Stop losses are your first defense. They automatically close your trade if the market goes against you. On Binance, you can set stop losses in both spot and futures. Don't guess. Don't say I'll watch it, just set it. Pro tip, use technical support resistance zones to place stop losses intelligently, not emotionally. Ever risked too much on a trade and couldn't sleep? That's poor position sizing. To stay safe, calculate position size based on your stop loss and risk percentage. Here's the formula. Position size equals account size x risk percent / stop loss distance. This keeps your risk fixed, no matter the trade. Leverage is powerful and dangerous. On Binance futures, you can go up to 125x, but just because you can doesn't mean you should. Start small, 2x or 3x max. And remember, higher leverage equals smaller room for error equals higher risk of liquidation. Always align your leverage with your risk tolerance. Another key concept is margin type. Binance offers cross margin and isolated margin. With cross, all your margin is shared. If one position fails, it can drain your whole account. With isolated, each position is separate. If it's liquidated, the loss is capped. Beginners should stick to isolated margin to protect themselves. Don't put all your risk into one asset or one trade. Diversify. Trade different pairs, mix spot and futures, and don't hold all in one coin. The market's unpredictable. Spreading out lowers your exposure, and avoid overtrading. The more you trade, the more fees, the more chances to mess up. Quick lightning round. Here are 3 risk management mistakes that wreck traders. No stop loss, over-leverage, revenge trading after a loss. Don't let emotion lead. Trading is a game of discipline, not ego. Let's recap. Know your risk tolerance. Always use stop loss. Position size smart. Respect leverage. Choose the right margin type. Diversify. Avoid emotional trading. These 7 rules can save your account and your sanity. If you found this video helpful, smash that like button, subscribe for more Binance trading tips, and drop your risk management strategies in the comments below. Trade smart. Protect your capital. And remember, in trading, risk is inevitable, but losses don't have to be catastrophic.